So for this panel, we have 5 panelists. Maybe I will let them introduce themselves. So we have Samantha Jerusalmy, partner at Elaia, Evgenia Plotnikova, principal at Dawn Capital, Alexandre Flamant, VP at Notion Capital, Valerie Gombart, CEO at iEnough, and Pia Diriban, VP at Accel Partners. Maybe what I can ask you is to introduce yourself, your fund, very quickly, and to tell us some of your portfolio companies, B2B and SaaS portfolio companies.
Thank you. So hi, my name's Alex. I'm an investor at Notion Capital. We're a B2B fund based out of London and investing across Europe. We do seed to Series A, have been around since 2008. We don't have a particular focus, but we love SaaS and the cloud. I'd say 90% of our investments are in that field. Some of the firms we've invested in that you might have heard of are Topia, which used to be called Move Guides, Go Cardless, Currency Cloud, and a few others. And we'll be here today and tomorrow, so make sure to stop by and say hi if that's something you're looking at.
Hello, I'm Valerie Gombart, co-founder and CEO of iEnough. iEnough is part of the Jerusalmy family office group, so we are more an entrepreneur who invests than an investor, than a pure investor. We do invest only in startups that provide products to corporate in order to modernize them, digitalize their business. So we're only on B2B. We have about 2/3 of our portfolio that is invested in SaaS. Some of the company you may know are Platform, that is now in the US. 360 Learning in French, as we say. We're also the lead investor of DeepKey, for example, lead investor in Commanders Act.
Thank you.
Hi, my name is Samantha. I'm partner at Accel Partners. Elaia has been founded in 2002, and we invest only in early stage B2B deep tech companies. We have done so far 50 plus investment, and we have 300 million under management. Companies that we invested in, such as Criteo, Sigfox, Teeds, Fretling, Zenchef, that is around a lot of B2B deep tech companies. I've been around since 2008, a long time now, and we're a great mixture of different people from different age, different genre, and different background.
Hi everyone, I'm Pia. I'm an investor at Accel. Accel, we're a global venture capital firm, started in the Valley 35 years ago. Now we have a global presence with an office in Palo Alto, one in Bangalore, and one in London where I work. We can invest at nearly any stage, so tickets between $1 and $100 million. SaaS is a core part of our strategy. We have more than 100 SaaS companies in our portfolio, which include companies like Slack, Dropbox, Atlassian, Qualtrics. In France, we're an investor in Algolia, Shift Technology, and Payfit.
Hi, my name is Evgenia. I'm an investor at Dawn Capital. Dawn Capital is exclusively focused on B2B software and B2B FinTech. We've been around for 10 years. We're now in our 3rd fund, which is $235 million. We invest in Series A and Series B in the startups. We had a lot of successes in software and FinTech before. So we IPO'd Mimecast for $1 billion. We were investors in iZettle. We just got acquired by PayPal, and we're actively looking for more winners across Europe.
Thank you. So the topic is about funding trends. So maybe I would say the first trend that most of the people will be interested is the valuation trend. So do you know the the napkin made by Point Nine Capital? So for those who don't know, Point Nine Capital is doing like kind of a paper with different stage and different valuation. So maybe it can be interesting to see for example in seed how much you can raise for what kind of MRR and so on. So if one of you want to jump in.
I don't know if you want to talk about the trends of the funding industry, which is either in B2B or in B2C startups, SaaS startups or not, but there is a lot of money on the table those days in Europe, in the US for sure, but in Europe and in France, a lot of companies are raising money and a lot of money. What we've seen on our portfolio is that company, like it's been 5 to 7 years old, that companies are raising a lot more than before. Let's say that the valuation and the amount raised per company at the same level of maturity is about 3 times. So before you were raising 1 million and now you're raising 3 million. There is no seed round less than 1-2 million and no Series A less than 5 million euros today in France, which is much more than what we've seen before. In terms of MRR compared to valuation, what is different than before is that maybe you've gonna raise or you raised a lot more than before, but before the company that we've been raising for were not making any money. For example, when we invest in Criteo, no money, it was pre-revenue. So there is a lot of company that is raising more, but are getting traction before, which is a good trend as well. So there's, I don't know the exact numbers, but I've seen that before it was 30% that companies that had traction revenue before raising money, and now it's 70%. So it's raising a lot. And the MRR, no, sorry.
Go ahead.
And the trend for the, we've seen a lot of things those days, but there is a lot of company with not a lot of MRR at the end of the month that wants to raise a lot of money. What we've seen is that there is a kind of psychological things at 100 MRR per month that is for investors really important to achieve. But before, for sure, you can raise money. So at least if you have between 30 to 70K MRR, it's the right time to raise. Maybe you've done before with business angel or family offices or friends and family, but it's at this range that you should think about raising money.
Is it the same figures for everyone around, or?
I think to Sam's point, market is flush with cash, which means people need to deploy it, right? Which, yes, effectively, it's still not the Valley standard where you can raise probably on, one founder in a deck. That probably doesn't quite happen yet, but yes, I think that the trend is people are raising more, people are raising earlier, and so that makes it slightly harder for us to, on sort of a risk-adjusted basis, to identify what's going to be the next billion-dollar company.
And well, do you see any difference between B2B and B2C companies for those who invest in both? Maybe Pierre?
Yeah, I think it's a different way to assess B2B and B2C companies. They're so really evaluating a company is really not an exact science at early stage. There's so many parameters that we can take into account. For us, what really matters is really what we see as the exit potential of the company, and based on that exit potential, what kind of multiple we can make in order to make the economics of our fund work. So in our case, we have a $500 million fund, and every time we invest, we think, okay, will this investment be potentially able to return the fund, given that we invest early stage and we take a lot of risk? So that means seeing multi-billion-dollar exits. And then in a way, to assess, I think with a B2B company, let's say our sweet spot is Series A and B, often you have a product market fit, some traction, so you can, and you can also talk to customers on B2B. So I think we take that a lot into account. In B2C, it's different metrics, different way to assess. But at the end of the day, it's still the same way of thinking about a market, an opportunity, and what's the exit potential.
We don't invest in B2C, but I used to work for a fund that does. If I give you one example of FinTech, and you think of challenger banks, right? So you think N26, Revolut, Monzo, and the amount of money that they have raised, and then you think of the B2B challenger banks, and you think Conto and Tide, Jean-Charles was on stage speaking before with Alan. I think that the answer is everyone is raising more. And sort of the only difference is the valuation. And I think in SaaS, what the beauty is, it's slightly more predictable when you know you put $1 in and you get $1 out. But in terms of the fundraising, I think the valuations are going up in every single sector. Long gone the days when DST put 200 million in Facebook and everyone was like 10 billion. Now I think it's a lot more frequent.
And do you see any difference between France and the other European countries, or is it similar?
There's some difference. iEnough operates both in France and in Germany. And I don't know the UK market, so I will leave it to my colleagues. But it's true that the amount of money on the French market has grown up very quickly on the last 3 years, especially because of BPI, who put a lot of money into the sector, which is a good news because it gives money for you entrepreneurs to really play the game of the high growth. But also because a lot of money came from the corporate. It's about 2 billion that came from corporate that has been injected for the last 2 years into the market. We have a very different situation in Germany, and that's the reason why we decided to open an office in Germany last year. Actually, Germany has not these strains so far, especially in B2B. There's two different words in Germany, that the Berlin words, where they finance very large success that you know, like Rocket Internet finance those B2C success. And there's a B2B market. And on the B2B market, there's very few funds, and they are very small on Series A and seed money. Funds that are about 50 million usually. That depends from university, like Unternehmen, for example, on the University of Munich. And that's a very big difference in terms of valuation, not in terms of how the company are able to build their business, but in terms of access to capital. So for us, that's a good opportunity to go there.
And you?
I think it's less about France than other countries, but more we look more at I think there may be some big difference between still Europe and the US. And then when we look at companies, especially in France, I think there are a few different types of companies. There are companies that are French on paper because based in France, but are actually very early on global companies and valued like US companies. So Algolia, for example, in which we invested from the beginning, had more than half of their customers in the US. Then you have companies that are French and only addressing, I think, France or European market, and that's a different way to assess. Our view, historically, I think a few years ago, we would have said that if a company does not go to the US, it's worth much less, and it's going to be difficult to get big exits with French or European companies. Today, I think it's different, and we really have a thesis that companies that just stay in France or address Europe can actually, that the markets are deep enough and that there's enough capital to create very large outcomes, especially on the consumer side, based in France. So Alan, who was on stage before, I think is an example of a company which is starting just with France. We have that thesis also in Dr. Lib and Payfit, which are starting to become European champions. And I think the thesis is and that's really forward-looking, because if you look backward, there haven't been that many huge exit with companies that have only sold to France or Europe.
Thank you. Maybe, one other question about trends is about the kind of companies, B2B and SaaS companies. Because SaaS is only a model, but different kind of technology and what the company is doing. So maybe, is it changing? Is it more?
So one of the trends we've been seeing, so why invest in Europe? It's still the world's largest economic market. There's hundreds of corporates here that are not only investing, but also have far more startup programs than in the US, so that's a good one. But on that note, the trends that have kind of started to shift is still in Europe, one of the largest investment sectors is deep tech, so it's about 9 billion since 2012. Obviously, this incorporates pharma and areas we don't necessarily invest in. But when we look at the areas we've been investing in traditionally, ad tech was very big, Criteo IPOs, and then that leads to founders moving and starting new brands. But the areas we've been focusing on really are a much stronger focus on a deep IP that's defensible across borders. So deep tech is obviously quite big, and within that, you get machine learning, more analytics, data science practices. But when I look at the horizontal generalist approaches versus verticalized solutions we're going after, so strong expertise in a field, usually that's 2 or 3 PhDs in their late 20s, early 30s, with people in their late 30s with 20 years of a very specific industry. That's where we go for, but I'd say it's a bit less focused on a specific sector, whether it's ad tech or healthcare, and it's more that just having a defensible IP that we go after.
Do you have the same experience? Well,
yeah, maybe just for you to understand. I guess there's a lot of entrepreneur in this room. SaaS is a business model. It's just really reassuring for investor to know that there will be revenue every month. Before it was ISP, and before it was license maintenance model, and it was a one-shot payment. Now it's just vested in the long run. What is good for investors is the way we evaluate those companies is kind of really structured. We know that you'll be evaluated about between 6 and 12 times your ARR. So it's really structured. It's reassuring for investor because we can predict the future. And often it's a B2B company, and that's why we decided to invest in B2B only. It's because often there's a breakthrough technology at the beginning. It's what you were saying about deep tech. We're really looking about technology at the beginning, breakthrough technology, something that is making the difference, because we invest in early stages between 2 companies in B2C that are doing exactly the same. You just invest in the executive possibility of the founders to make it happen, right? In B2B deep tech companies, it's really different because we invest in the founders as well, for sure, their capacity of execution, but as well on a really technological asset that we think is the breakthrough technology. It was the case for Sigfox, for example, that it was 0 or 1 investment. It's either it happened or it doesn't happen because there's technology, very distributed breakthrough technology at the end. But you know that even if it doesn't happen and we're not sitting in achieving the market, at least you have this asset, this technological asset.
Maybe I can tell you about some criteria that we use to select the SaaS investment that comes over our desk. Actually, most of our LP are corporates or entrepreneurs. So we start from the need of the client, to be very basic. We manage SNCF Digital Venture, which is the corporate fund of our national rated company. So basically, at the beginning of the year, they give us the list of everything they want to get, in their dreams in terms of technology, and the issues that they have in the business. And it gives us the ability to go into sectors that are new, innovative, but that can be accepted by the market. Because the risk when you're a venture capitalist is to invest in a very good idea that will maybe be a very good idea in 10 years from now, because the customers are not ready to get the technology into their organization for very different reasons. If I take the example of the data science, before the corporate has organized itself with a data lake, with a team, with people that get the data from all the different sources of the organization, there's no way you can sell a machine learning tools. That's very basic. And the second criteria that we have, of course, we always have the same criteria, the team, the ability to build an international business and so on, is about nice to have or to have. What is the pain points that the SaaS solution answer into the customers? And we're very careful, especially on those times where things are great, we have a nice economical period, and I've been in the VC for 20 years, so it has never been that long, so I hope it lasts. but we know that everything is cycle. And I always ask to my team to look at this very specific question. Is the software solution that you're looking for to invest in, is it something that is necessary to the customers for its business to operate, or is it just something that is nice to have? What's the ROI for the customer?
Thank you. Well, today's competition between VCs, well, I would say for good deals, is pretty harsh. Well, when I used to run B2B Rocks, every time I talked to VCs, they all said, well, specialized in B2B and SaaS. And so aside valuation, how did you really differentiate from each other? What do you bring more?
I take this one. I take this one? Or everyone takes this one, right? We're gonna market ourselves now. No, honestly, being really transparent, we all saying the same thing. Not the same sheet, I would have said, in another configuration, but not on stage, right? But we all saying the same sheet, meaning that now we have an expertise and we do things precisely and we are really expert on what we invested in. That is true. I mean, we've been doing this job for a lot of time and we've seen much more company that you can see in your entire life, right? We receive about 2,000 to 3,000 companies per year. We invest in a bunch of companies. So we know more about what you should do and you should not do. But it doesn't mean that it makes us good investors or not good investors. Now it's the time we market ourselves. What we started to create and to build at Elaia is for sure this expertise, because we invest, now we can say that we invest in B2B tech companies at early stages, right? But it happened, like it's been 5 to 7 years that we're telling this. We learn to tell this because we've learned about companies that we invested in and that we know what we're good at and not good at, right? We build this company with different people. It might be kind of gap advertising, whatever, but we build this company with different people, which we think is a key for performance. And we acting as performance people, meaning that at the end of the day, the money that we're gonna have is not about the salary that we're gonna have at the end of the month. It's the performance that we're gonna do on investment that we're doing, the ROI that we're building on top of this, right? So there was a long run to achieve to this strategy that we have now, and it seems very obvious now for everybody. We don't have any expert internally that, for example, such as Andresen Novrovitz, which is the base model that we know about it. They have between 60 and 80% dedicated to their entrepreneur. We don't have this. So we're all saying the same thing, and maybe what you can, as facts, what you can see is how much money that we raise, how deep are our pockets, right? How many, are we putting money over the fund, over the fundraise? What is the exact strategy, and who you be dealing with? So, as we're making reference for you when we invest in your company, do references about the investor that you're gonna bring around the table, right? So we don't have those experts. We think that we have kind of a reverse pyramid in terms of structure. So we are 7 partners, male, female, from the 30 to the 60, from different background, either engineering or business or serial entrepreneur or so. This is what we bring, like the people that is.
Yeah, I mean, the reality of is my dollar is no different from anyone else's dollar on the stage, right? Like money is a tool to achieve your budget and achieve your goals. I think that the reality for us is, and one of the reasons I joined on is pattern recognition. I think being a focused fund who does, as you say, B2B and software over a course of 10 years is helpful. You know, people talked about expanding to the US before, about building products. So simple things like how do you do that? Or what is a quota for an account exec in Chicago versus Boston versus New York? Those kind of tools is helpful to have alongside. And it's important to pick a venture capital firm that's seen some big successes, that knows how to IPO a company, knows how to sell a company, but also big failures, because then you can learn from their mistakes. But to Samantha's point, I think that the number one criteria at the end of the day is people. Ultimately, having a VC board member is a bit worse than having a marriage. You can't really divorce us, so we're going to be there for the very long ride. So you better like the people that you have selected to be your partners and your quarterbacks for the next 10 years of adventure.
Pierre, Valerie, Alex, do you have anything to add or any differentiation?
I think that I agree with some of the things that have been said there. I think with regard to Accel, what is quite unique, and also one of the reasons why I joined Accel, is really this global platform. So not only can we invest anywhere, and we have a portfolio of SaaS companies, of more than 100 companies all around the world, and at every stage, which is a network that all of our portfolio startups have. We also have this global presence on the ground, with an office in London, an office in Tel Aviv, an office in Bangalore, and an office in the US, which means that any startup from our portfolio has access to help and network and best practice on the ground in every geography that they will want to expand in. And so when you're starting in France and wanting to go to the US, it's very relevant. But we also see more and more cases of startups coming from Asia to Europe. And we even see in some cases startups that only will address the European market. But given that in B2B and in SaaS, a lot of best practice can be shared. If you're for example a startup with like PayFit, and where the product is really important, then you can have access to also really the best product startups in the world, in the US, like Slack, and I think the founders of our portfolio really value this.
Maybe to bring a model that is a little bit different at iEnough. Actually, since most of our LPs are entrepreneurs or corporate, we've built an organization within the team with people that do the investment, they are investors in the sectors, and people that do supports. And we have a very strong business development support for our portfolio. And as I said before, we start from the needs from our LPs, from our customers. So we do not invest in any SaaS companies that will come to us, but only in the ones that we know we can do this business development relationship towards our LPs and our customers. And it's a model where we don't raise a lot of money. We have under management 120 million. We don't do a lot of investments. It's about 3 to 4 per year, but we work a lot on the portfolio to help to go for the hyper growth that we are looking for, and we bring the customers to the company so that they can raise this 100% growth that we are looking for.
Okay. At this point of the conversation, I normally say we're a specialized B2B fund, but I think it's neither the time or place. But I think we all realize this is the longest bull market in modern history, even more than in the 90s. The market is flush with cash, so to all the entrepreneurs in the room, thank you for listening to us. But maybe something we all have in common is the markets are far more transparent. We're seeing US investors looking at Europe a lot more. We're looking at Asian money as well coming into Europe. But one point that most of the funds brought up here is we're not only specialized in that we only do B2B, but we're in Europe. We're here if you have a call at 2 a.m. And as a lot of the companies that we invest in typically move over to the US or to new markets like Singapore, these are stories that we've done. In our case, we're lucky to be led by a team of partners that have done this 3 times. But yeah, I'd say that probably the one point that all investors here have in common is we're here, we're on the ground, whether that's London, Paris, Berlin, and it's worth keeping in mind that these are experiences, pattern recognition that we've developed in just how do we get these European companies to not only be champions in the region, but also at a global level.
Thank you so much. Well, we are running out of time, so I think we still have lots of questions, and we did prepare, but, well, next time. Sorry. Thank you very much.
Thank you.